Okay, so let's talk about 2025, because in the Middle East and North Africa, the startup scene didn't just grow, it basically detonated. We're about to dive into this landmark report from WAMDA that really captures one of the most explosive funding years the region has ever seen. So let's get right into the numbers. Right, let's start with a big one, the headline number. In 2025, startups across the MENA region pulled in, wait for it, $7.5 billion. Just let that sink in. That's a figure that changes the entire game. And how does that compare to the year before? Well, it's a 225% jump. This wasn't just a little bump in funding, it was more like an earthquake that completely reshaped the entire investment landscape. So, how in the world do we make sense of this explosion? Well, here's how we're going to break it down. We'll start with a big picture, then we'll zero in on the countries that are really leading the charge. From there, we'll follow the money, see which sectors hit the jackpot, and then look for signs that this whole boom is actually sustainable. And finally, we'll ask, what's next? All right, first up, let's really get a feel for the sheer scale of 2025. I mean, the numbers themselves tell this incredible story of pure, unadulterated acceleration. So the funding was spread across 647 startups, which is a lot. But look at the timing. This is what gets me. A massive $5.7 billion of that total landed in just the second half of the year. And even if you take debt financing out of the equation for a second, traditional equity investments still shot up by 77%. That tells you the growth was absolutely everywhere. So where exactly did all this cash land? As you're about to see, the investment map was pretty much dominated by just a couple of key power players. In 2025, the whole region was basically a tale of two titans. Saudi Arabia just stormed back to the #1 spot, attracting an incredible $5 billion. That's a, get this, 618% increase from the year before. Just wow. The UAE also put out really strong numbers with $2 billion. But let's be honest, Saudi Arabia's surge was just on another level. And you can really see the concentration of capital here. I mean, after the top two, the numbers just fall off a cliff. Egypt, which is traditionally a really strong market, came in a distant third with $263 million, and Morocco was leading North Africa with $38 million. It is crystal clear that the Gulf powerhouses are playing in a league of their own right now. And this wasn't just local money pouring in, not by a long shot. 144 startups got backing from US-based investors. Now, that is a huge vote of confidence. It means the world's most influential VCs aren't just kind of watching MENA from the sidelines. No, they're actively writing checks and investing in its future. Okay, so now we know where the money went. Let's look at what it actually funded. Which industries, which ideas managed to capture the lion's share of that massive $7.5 billion? Well, the answer couldn't be clearer. Fintech. Financial technology startups raked in $4.4 billion. That's more than every other major sector combined. PropTech was a very distant second at $1 billion. Then you have e-commerce. As this chart shows, fintech wasn't just the leader in 2025, it was basically the entire story. Just think about this for a second. A 527% surge in funding meant that fintech alone accounted for nearly 60 cents of every single dollar invested in the region in 2025. I mean, that's not just growth, that's total and utter dominance. But here's the catch. This incredible total wasn't spread out evenly. The year was really defined by a few so-called mega deals, basically a handful of mature companies raising such massive sums of money that they kind of skewed the whole picture. And two names really stand out here. In that booming buy now, pay later space, you had Tamar's jaw-dropping $2.4 billion deal, and then Tabby's $160 million round. I mean, these were the absolute titans of 2025. These are the kinds of mega deals that truly defined the year. So, beyond the eye-popping funding numbers, there are actually other signs that the MENA ecosystem is, well, growing up. Let's take a look at some of the underlying trends that really signal a maturing market. One of the clearest signs of maturity is the type of funding that's coming in. A massive $4 billion, so over half the total, came from debt financing. Now, what does that mean? It means instead of just selling off pieces of their company, these startups are now mature enough to secure huge loans to fuel their growth without giving up equity. That's a big deal. And just look at how dominant debt was. $4 billion in debt financing absolutely dwarfs the funding from Series A and B rounds combined. And those are usually the typical markers of venture capital. This really represents a massive shift in how the region's top companies are getting their funding. And hey, another key sign of maturity is a healthy exit market, right? For an ecosystem to be sustainable, investors and founders need a way to get their money out. And in 2025, we saw a really big increase in acquisitions. The region saw 66 acquisitions in total. Now that's a 54% jump from the year before. It's a really clear signal that the market is consolidating and successful founders are finally getting that big payday. And no surprise here, the most M&A activity happened in the most mature sectors, led once again by fintech with 14 exits. Geographically, the UAE led the pack with 21 exits, followed by Egypt and Saudi Arabia, which pretty much reflects where the most established startup hubs are located. So, after a truly historic, record-shattering year, what comes next? Let's wrap this all up by looking at what the data might suggest for the future of the MENA startup ecosystem. Okay, so how does this incredible growth become something that lasts? Well, the report points to two really critical challenges. First, the capital needs to spread out beyond just a few mega deals to help nurture that next generation of startups. And second, the ecosystem needs more traditional equity investment to balance out this heavy reliance on debt. And really, that leaves us with the ultimate question, doesn't it? With so much of 2025's success concentrated in just a few massive deals, and so much of it fueled by debt, is this startup boom actually built on solid ground? Or is it maybe a bubble just waiting to pop? That is the multi-billion-dollar question for 2026 and beyond. Thanks for joining us.